Right. So Sherman here, and it's an exciting Monday. Okay, let's look at the date. Today is the 1st of July, 12 p.m. in Singapore. As usual, I like to go through my charts, previous week's charts, and see what exactly I got right or wrong. Okay, let's go look at. So I did gold, oil, pound, lots of pound. I was also actually looking at the decks here. Some of them are private because I think they're tricky. So I don't want to put the incomplete charts up unless charts that I put up on TradingView. I try to make sure it's more or less, the swings are more or less complete before I put those charts up. But let's cover 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I think we can cover 12 charts. 1 minute charts are not allowed on TradingView because time frame is just too low. Minimum TradingView requires 15-minute charts, 15-minute time frame charts before they're allowed to be posted live. But anyway, let's just go see what happens. Gold bull bias. Okay, so this one fell lower. Let me see. So put it on private because I was trying to see any form of entry here. You see here. So this one was for my own reference. If you notice, I always write we need some kind of confirmation. So this was on private because well, I'm trying to find an entry in, and this is usually good confirmation. And I did not get an entry, and it went lower. Can this structure still like come this way and still push up? It can still do that, right? But what if it does something like this, takes a long time? Well, that means you're looking for the downside, right? So right now, gold, I still have bull bias. I'm not in this trade yet. Okay, so let's hope it goes up. I'm going to skip this oil and go look at this gold. So this one actually I posted there's a gold fifth wave. See with a question mark, because these kind of fifth waves, fourth waves to fifth waves, they are always difficult to take. Right. So I don't normally like to put question marks. So when I put a question mark here, we should take note. Okay, it's tricky. So right now it's gone down. So it's gone down. So it did this and then it broke down. Right. It's right now over at this level. It's still a buy, right? Gold is still a buy, even though it dropped to this level. If you see anything that looks like sideways, like something that looks sideways, anything that gives you some kind of sideways, so any kind of side, you see anything like this, you should buy it. All right. If you get stopped out, so be it. But these are good buys, right? Okay, so gold, that's done. Let's look at this oil. Oil. So oil, actually, this was a good buy. Actually, up to this level, it was a good buy. If when this one went up here, if no profit was taken because if you thought this would happen, then it would have been stopped out for sure, right? Of course, if you were scalping, then this was it. Break the top, couple of pips, close the trade, right? So in this case, it went up here. Now, when it came down here, this level here, any trade here is a reaction trade. Why? Because remember, I think you know why, right? Those who understand how I trade, reaction and swing are not the same. So if you took this one, this is swing, right? If you went up here, came down here, these first waves, third waves, swing. If it's just like this is a reaction, right? So any trades here are reaction trades. And as you can see, it was very tricky. I mean, reaction trade, it came down, then it shot up again. So the way to make this is swing trade, reaction trade. Yeah, that's the thought process. It's best not to confuse the two, right? Okay, so pound dollar. What is this? Oh, this one was set on price. This was tricky, but there was definitely one down. No, this one you were expecting an up to break this top here. Once it goes up, the bias is actually downside this way. Although this could have happened. So basically it went up, then see it came down this way. All right. So these are all the decision points. From here, it could have continued down. From here, it could have continued up. Right. Uh, Essentially, we look at charts like that, right? An entry when it came up here, this would have been a over here. This one you could have tried here. Over here, these are the what do you call decision points. Whether it wants to, it can either swing down and continue, or it stops right there and then starts to turn, right? And that's why I never advocate aggressive entries, because aggressive entries, basically you have no stop loss. If you try to go for aggressive entry, it needs to be on a very high time frame. So when you're playing around 1 hour, 4 hour below, it's best to use some kind of confirmation, right, before taking the trade. Right. So up and down. Then from here, it's a good idea to have taken profit, because this is actually a complete structure over there. This one, two. This one actually just broke this by a little bit. 1, 2, 3. Any buys, you will try to buy a low to get to this high. Once you're at this high, you're trying to sell the top to get to this low. That's the thing. If you have bought here, this is all bonus. If you're sold here, this is all bonus, basically. All right. Okay. Pound yen. Pound yen, basically, I don't want this to break, so I'm hoping that this actually goes down. Now, this one has actually gone up, came down, it went up, so it's still a sell, Essentially, this looks like, this suddenly looks like a very good sell, but these are all reaction trades, remember? Reaction, swing. So this is bonus, this is the minimum. And if this is an aggressive entry, stops are above there, right? Pound dollar. Let's see what's pound dollar. So over here, this was this is a 4 time frame. This one was you see, this and this are actually similar. So while I'm looking at the higher time frame cycles, right? This is a 4 hour. Whenever you want to trade it, you need to go to lower time frame to try to figure out how to enter the trade, and that's important, right? Because high time frame cycles, aggressive entries can be entered on the higher time frames, right? But when it comes to that usually requires some kind of you need to make like swings like this, this kind of structures, or like this comes here, then it continues further, and then like this. So these higher time frame structures, they tend to respect movements such as these. But when you're actually looking for small little movements within here, you need to trade a lot. We need to do it on a very low time frame. Right. So this was the 4 hour. This is actually trying to figure out what's going on in these candles over here. See these candles up and down? All these little candles need to be done on the very low time frame. Yeah. So now the reason why I do this is because this is still in the uptrend, and if this one took a long time and it just stayed around here, this outside is still very possible, right? So see, I still like the upside. Now this one is actually one wave down, right? So basically this one did something like that, which is this, and then now this is doing that, which is that. Now, can this actually go up on the low time frame? It's still tricky. What you want to see is something like this, and then you want this to go up this way. But can this also do that and then drop? That's also possible, right? That's also possible. So the best way to trade this, right, is to hope for something corrective and try to take it somewhere in the low. So when it goes up there, you can put the break even, right, and then hope that this one continues up. And the bigger trend for pound dollar in this case is still up to at least to break this top. So if it were me and I managed to get a trade here, maybe on Thursday or Wednesday, I would try to keep this. But also bear in mind that you must put the break even as quickly as possible, because why? You don't want to get caught by that. But this is very elementary. Don't forget, this can always go up and break the top as well, right? Don't always think that this is going to happen. This may not happen at all, right? So it's a good idea to try to play up to here. take some profit if you want, because these are always these levels can always react. But if you don't hold, then you're in for good times, all right? So get in the low and then see what happens when it gets up to these levels. Okay, so that's just pound, right? Start on the we start on the higher time frame and then we go to the lower time frame to see what the heck's going on, right? So 1, 2, 3, 4, 5, 6. Okay, let's look at pound yen, up and down. So pound yen 4 hour. Ooh. So this one, actually, what I wanted it to do was something more like this, more like that. I don't like these levels to break. I was hoping that it could hold. It broke through, but breakthrough doesn't mean that it's going to continue up as well. So this can be a credit structure. Okay, can still be a credit structure. So any sells here are a good idea. Just a reaction. Pound yen, my bias is still down though. This is still very, very possible. It still looks like that. I would still be very interested in the sell of the pound yen. Yeah. So any trades here are basically picking tops. The stops have to be above it, and you'll be stopped. And these are aggressive entries. So if they go sideways and down, it'll be a good idea. Pound yen, okay. DEX. Also, I'm trying. What is this? Let me see. Oh, I must have put a sell here. See sell bias. Okay, let's see what's going on now. It's going up or down. So it's a daily chart, so it's not much movement. So if I like the DEX down, that means pound dollar, Kiwi dollar. That means I'm looking for dollar weakness, basically. All right. So that's on my mind. All right. S&P bear bias. What's going on here? Let's see. So this one, what actually I wanted was this one not to break this top for sure. Because this one looks a lot like a possible double top. Now, can it do this? Can it do this? Can it do this? For sure it can. So when it comes to daily structures, right, the risk management must be in place, especially when trying to pick first waves out like this. Right, the first move down is always dangerous. So these are all aggressive type of entries for aggressive traders. If a trader was aggressive and looking to enter this kind of trades, right, that means they have some kind of risk management plan where they probably will average down. And if they play without stops and average down this way, it also means that they might be using some kind of pivots, maybe some kind of pivots up here to try to add. And then as this one crawls, they're looking for it to turn back down. Okay. Dangerous style of trading. I don't like to trade that way. But the lot size has to be extremely small in relation to the account, basically, because you just basically try to pick a top, right? So as you see, as this one starts to go like this one, if you sold here, you have to find some way to average it down before that actually happens. Because when this top breaks, there's no telling how high it will crawl, right? So picking tops, trying to pick this wave, you see, trying to pick this wave, this and that, trying to pick these waves require good risk management and knowing how much drawdown your account can take, right? So these are aggressive entries. If you want to pick that top, it's an aggressive entry. And be prepared to lose the money if you are, because there is no confirmation, that there's no technical confirmation that it's going down, right? So if this had done something like this, that would be a nice structure, but to sell into. But unfortunately, you don't really have that. Actually, what you hope to see right now is hope to see that this one actually holds. This one holds. This one goes up and down and holds like this over here. This actually this is a double top of a double top of possible double top. So it looks like it's topping out actually. Yeah, it still looks like a nice double top. But let's see, right? Let's see. So yeah. Let me see. So if you see stuff like that, you see this stuff like this, see where it went up, right? But what happened, it still went above. It still went above there. So it came down a little bit. So I'm not sure whether anyone be interested in that because the bigger picture was still upside. It still trails up. This one, the reason why I like this one is because this one was pretty strong. So you at least have this strong move here where you can actually come back down to this low. You see. This one kind of didn't. This move here didn't have any big brother. This one has a big brother over here. So big brother bear says, hey, one down is possible, but you need to find some kind of entry, right? Aggressive and conservative entries, you need to something small. Aggressive entries, smaller lot sizes as you average up. And then if you lose, if it just does this, be prepared to lose it. All right. So those are aggressive entries. Again, I stress entries are important in risk management. Forecast is like forecast is the bias, but entries is the bread and butter. All right. Okay, let's do the last three then. Euro, pound, bear bias. I'm in this trade. I'm trying to pick the top. It's in profit right now in the moment. But I'm also wary because I know this can happen. That's why picking tops like this, like a top here. Entries have to be small, right? So that you can slowly survive this torturous crawl, right? Small lots. Swiss yen. What's this? Let's check now. Wow. Okay, so it managed to break that very strange crawl. When it starts to crawl like that, you usually want to exit that because, man, you never know what this could be. Man. This could be 1, 2, maybe this could be like this, and then now this could be falling. So Swiss yen, this whole looks down, So this one, now this is very interesting. See, this happened like this, but that never happened. Now this could go up like this and then drop. That could happen also. This could also do this, crawl up until there, and then it drops down. I mean, of course, it could make corrections like this, a correction like this as it drops. That's also possible. So stuff like this, I think it's better to take profit as you go. So let's say this one did that, right? What you're hoping for right now is you actually want this to happen around here, around this level here, around these levels here. If you fit from here to here to 8.6 around here, always good to take off some profit because you never know. This one could always pull up this way. Take out your order before it goes. So taking bits and pieces of the trade is an important thing to do. So let's say it comes here, let's say it goes up here, it comes down this way. You see, if let's say this went up and then it drops this way. You see, this is you must take that. If you don't take that, what happens is it could always do this, it could do this, it could do this, it could do that. Then after that, on hindsight, you say, oh, this was a correction. Well, that's in theory it's fine to know that, but in practice, if money's on the line, we have to take some money, right? Take some money and yeah. Okay, so or maybe this could be that too. See, now this is all. Well, I'm just sharing the scenarios that I see in my head. It's just like chess, A lot of scenarios could happen. 1 and 1, 2, 3. Yeah. Okay. So now this chart. So we already got the buy. Can this crawl up? So what you want is for this to crawl up and look for the sell. But this sell needs confirmation because why? You really don't want something like this, and then the crawl just continues. But at this point, I'm definitely inclined to the downside because these stacked orders over here, this one, I think price action will come and break this low at least. Somewhere around here. So this move very possible. At this point, I'm biased with the sell. So here was biased with the buy. Here, at this point in time, biased with the sell. Okay. Okay, last one, euro dollar. This was 1 minute. Did I take this euro cat? No, I didn't. I just saw it. So out of practice, I just saw it. Basically, I like this move up. Okay. Okay, you can't load data. Never mind. So let's go see whether I got it. whether this is wrong. Let's go see whether this kind of swings actually work on a 1 minute, which it does, right? So let's EuroCat 1 minute. Let's see what happened there. EuroCat. EuroCat. All right, let's go look at EuroCat. Okay. No. You see that, yeah? You see that? It was supposed to be over here, something like this. So, see that? So, anyone took an aggressive buy? 1, 2, 3. No. What was this right to think that this could go up? Yeah, the buyers will still happy the upside, you see, but a buyer still. That's why it's important to stress. Buyers requires some kind of little confirmation. The confirmation, like what? Like something like this. So if it did something like this, these are little confirmations that say, hey, you know what? You can get something like this at least up to there, right? So confirmations are important because if it's aggressive, the stop would have been there already. Now, is it wrong to aggressive entries? I think it's okay, so long as a trader knows what to do. If you want to play out stops, that's fine also, for long as you know there is some kind of the stop is in the finger. Yeah, some traders say, if I lose at least 2,000, I will just click close. I cannot do that, right? So I'm not such a basically, for me, if I have the loss, I don't want to close my trades, right? So I rather use expert advisors to handle my trades for me once it started. Right? So aggressive entries, again, here as you can see how dangerous it is, right? It's dangerous. It even broke this low. Check it out. Now, I have no doubt this one, honestly, to me, at some point, this is going to go up and all these is going to get taken up for sure. It's just a matter of time, right? So, but I think this is a good moment here, because when things go well, so it's not much to learn. But when things are funky like this, things might look like that, and they say, "Oh, impulse correction, impulse." Well, there was no impulse here at all. So, but still, it's always a good idea to play with the trend as much as possible, because if you play the trend as much as possible, at some point, you think that it's going to continue, but when it does not go break the top, and say it turns down, maybe you took this loss, but at least you were in the, buy. You would have been good out 4 times, but the one time that you failed, it's okay, because you already made, you were the trend until the point where the trend actually turns. And if let's say your entry is conservative, you would not be in this. You would not have taken this loss as well, right? So that's trading trend is a good idea, and being less aggressive after the trend has moved quite a while is also a good idea. And if we are aggressive, you gotta know where the stops is. All right. So, all right, that's all today. I gonna go take my lunch and go for a walk. So let's just end it here. Okay, bye bye.